Tesla stock rallied 11% following earnings, and what do we get? FUD. A ton of FUD. And we're going to talk about it and defud this FUD in this video. But as well as that, if you have not noticed from the title, you need to watch this video ASAP because you have important economic data coming out Friday morning. That is going to be January 27th. That could really move the markets, guys. We have earnings out of the way. For this week, you did get Intel that reported earnings Thursday and after hours. Nothing on Friday that's really going to be a big market moving kind of event. So all we have left is the data until we get to next week, and then you're going to get the rest of large cap tech and the Fed meeting. So there's a lot that's going to be packed into this video, guys. I don't want to waste too much time. We're also going to look at option activity, the interesting option activity on Tesla, as well as the S&P 500. So a lot of information jam-packed into this video. Let's get into it. Hit that like button and subscribe to the channel if you are new here. My name is Michael Tyler. We cover everything you need to know, hopefully in short, concise videos to really get a perspective on what is going on in the markets to help you make money. And some videos are longer than others, but relatively speaking, we try to keep things pretty condensed and easy to understand. So let's get into this information, guys. First things first, like I said, Tesla did rally 11% following earnings. And the big reason why Tesla rallied, it wasn't that they beat the top line revenue numbers or the revenue expectations. It wasn't because they made more money than what people were expecting. Those are positive things, but it all came down to one specific phrase from Elon Musk. He says, quote, "Thus far in January, we've seen the strongest orders year to date than ever in our history. Quote, we are currently seeing orders that are almost twice the rate of production." That means for everyone thinking demand was dissipating for Tesla, in all reality, they can't even keep up with demand. For every one vehicle they produce, 2 of them are already being sold, or roughly as per what Elon Musk said. So this kind of news could keep Tesla stock going for a while, but then you got analysts coming out and hating on the growth rate. Now, Tesla has been aiming for 50% annual growth. Well, they guided for 1.8 million deliveries. That would only be about 37.5% growth from 2022 to 2023. But what people are failing to realize is actually Elon said if everything goes well, the production capacity is around 2 million vehicles. So they kind of guided for 1.8 on the low end and for about 2 million on the high end. If you just deliver 200,000 more vehicles, that difference between 1.8 million and 2 million, you're going to be at 54% growth. And then if you're at like 1.95, you're going to be right around 50% growth from 2022. And that is the biggest story of FUD that you are seeing, is these economists are coming out and giving grief to the 30% growth, 37% growth target. But what is actually funny about all of this is Tesla stock was priced for less than 37% growth in 2023. Tesla stock falling from $300 in September down to $100, a drop of 65-ish%, was not pricing a lot of good news for 2023. So it looks like we might be free and clear as far as Tesla specific news as of right now until we get to the investor day, which is going to be in early March, and we're going to get more information on the future of Tesla. So I wouldn't pay too much mind to some of the FUD that you are seeing. Another FUD article is this one, which I think is just complete BS overall, and we'll just click on it real quick. It says the enemy is inside of Tesla. Wall Street analyst warns on Elon Musk and goes into why Elon is the main problem with Tesla. And granted, it is the reason why the stock did fall so much towards the end of 2022, but the markets are looking past that at this point. The markets are looking at Tesla and the Elon situation, and they're saying, hey, what are the odds that in 2023 Elon does listen to his voters on his Twitter post that said that he should step down from Twitter and focus on Tesla? What are the odds that he actually does that in 2023? After all, Elon is a man of the people, and especially investors. And when your, can I say it, ass is on the line to perform for your main business that, quote, will be a magnitude higher than the highest market cap company in the world, give it some time. That's what he said on earnings, that essentially Tesla's going to be the most valuable company in the world. I think it's pretty clear the markets are seeing past the Twitter drama, that is going to become a tailwind and going to be a very positive thing that could push Tesla up throughout the rest of 2023 when that announcement is made that Twitter will get a new CEO. So long story short, in this segment of the video, I just want to warn you guys on what is being said about Tesla and why there's really no relevance at this point. That's what people were freaking out about in late 2022. This would have been a valid point in December of 2022. A lot can change. Give it a good 2 months, and that's what you are seeing, especially after Tesla earnings. Now, a bigger portion of this video is acknowledging what's going to be happening Friday morning. So you're going to get a lot of data coming out all at the same time. And considering you already had Microsoft earnings, you already have Tesla earnings that happened this week, and both of those produced a pretty positive reaction in the markets. Obviously, guidance for Microsoft wasn't so great, but it didn't crush the markets. It wasn't too far off people's expectations. It wasn't like Intel's guidance that we got Thursday after the bell. The only thing that's going to matter for Friday is going to be economic data. And then you're going to have your whole list of hurdles for next week. Large mega cap tech. You're going to get Apple, Amazon, Google that report earnings next week, as well as the Fed meeting on February 1st. And that's going to be a bigger concern. But based off of what these PCE, specifically the PCE numbers, come out as Friday morning, that could dictate a lot of market sentiment heading into the Fed meeting. So let's run through this data real quick, and then we will switch to talking about the option activity, guys. So you have core PCE price index month over month for December. All of this information comes out at 8:30 in the morning. Literally all of it, besides Michigan consumer sentiment and pending home sales, Michigan inflation expectations, Michigan 5-year inflation expectations, and Michigan consumer expectations. That's a mouthful. That data comes out at 10 o'clock in the morning. So you're going to have a half an hour of regular trading to react to that. But a lot of this data does come out at 8:30 in the morning. Everything we're going to talk about besides that Michigan consumer data. So core PCE price index month over month for December. In November, you were expecting a 0.3% increase to PCE. It came out at 0.2%. Well, now for December, you're expecting a 0.1% increase. And I do think there is a big chance that this actually does come in negative due to a lot of the price cuts that we've been seeing and really commodities cooling down over the past couple of months, more and more so in shipping costs. I think PCE could come in negative. If PCE comes in negative, there's going to be a lot of pressure on the Fed to give us a lot of really dovish verbiage, and I think that could send the markets exponentially higher coming tomorrow. At the same time, guys, we've seen so many good inflation reports back to back to back that there's a chance this report is one off and maybe it comes out the same as November at 0.2%, in which that would not be a positive thing. Now, you're also going to get personal income month over month for December. In November, you were expecting 0.2%. It came out double that at 0.4%. That's where a lot of the concerns in November about a wage price spiral really came from, was this data right here. Well, now in December, you're expecting a 0.3% increase, so a slight reduction from November's levels, but still pretty elevated. If personal income comes in, let's just call it a standard or two deviation higher than what it should, call it 0.6% or 0.5% of a gain to personal income, you might get some more fears about that wage price spiral, even though we are not seeing that currently in the inflation data. So that's going to be a big one as well. Personal spending, guys, is also going to be huge. So in November, you were expecting a negative 0.1%. It came out as a positive 0.1%. So it was expected to be really bad. It came out not good, but in positive territory. December, this reading that we're getting Friday morning, you were expecting negative 0.1%. If this comes in super negative, I think this could be one of those gray swan events. It's not going to be a huge one, but if it does come in super bad, you're going to get more concerns about economic activity slowing down. And ultimately, that's what matters, guys. The Fed can raise rates and do whatever they want, but until economic activity really comes to a halt and you see that recession and you see people stop spending money, and then the Fed ultimately cuts rates, that's when the markets have crashed. Believe it or not, it's not when the Fed's raising rates markets crashed in history. It's when the Fed cuts rates that markets actually crash, at least what history over the last 40, 50, 60, 70 years has showed us. Maybe this time is different, but if economic growth and activity does slow down, it's not going to boast well for the stock market. So that's something to keep in mind. We preferably want it to come in right on expectations of negative 0.1% or even positive 0.1% would be welcomed by the stock market as of right now. As long as this data comes in line with expectations, you're going to be a-okay. If you see a big move up or down in any of this, it's going to cause that big reaction. And I do think considering the S&P 500 itself is, I mean, you're over 400, that major level. You're at 403.69 right now. That's where we close regular trading Thursday. If it's bad, I mean, you could fall back down under this trend line. And that's where the real problem will come in. On a technical basis, if earnings are good next week and the Fed is bullish and the markets keep going, you're going to be in a brand new bull market for 2023 until, for lack of a better word, shit does ultimately hit the fan or growth does slow down to a point the Fed needs to cut rates, and then that's when people will ultimately panic. So besides all of that, the last thing that we are going to cover in this video that I think is very important for you guys to also see is the institutional large money positioning in the options world, because that is where things are pretty liquid, right? You could buy, sell options pretty fluently, and that is leveraged gambling or a leveraged bet depending on how you're actually trading these options, guys. So for Tesla on Thursday, you've seen 1,200 orders placed on Tesla worth $2.04 billion with a positive order value of 60%. So meaning if you just for an example, put $100 into Tesla options, 60% of it on Thursday was bullish, either selling puts or buying calls, and then the other 40% was bearish. Now, what we're seeing for Friday is about 48% of the open interest being calls, 52% being puts. Same exact numbers for February 3rd, and then February 10th, you're seeing about 40% of the open interest being calls and 60% being puts. So more of that bearish weighting towards early to mid February. It's pretty much the same story as well for the S&P 500. If you take a look at the S&P 500 option activity for Thursday, and give this a second to load, give it a couple seconds to load, you're seeing about 8,000 orders placed on Thursday, $817.53 million with a positive order value of 68%. So again, $68 out of that $100 being bullish, and the remaining amount, right, $32 of that being bearish. Now, if you take a look at the positioning for this Friday, you have about 30% of the open interest being calls and 70% being puts. So actually a lot of people waiting bearish towards the end of this week. And then if you look out to February 10th, going to be the next large option expiration. Again, 73% of the open interest being puts and 26.65% being calls. All in all, there is some short-term hurdles over the next week or two. If you get through those free and clear, there's not going to be a lot that could really disrupt this market. So we're really at a moment right now where things are either going to get bad quick or they're going to stay good for longer, guys. And I think just given where the markets are at, earnings have been good so far. You need Apple, Google, and Amazon earnings to also show strength like Microsoft and Tesla earnings did this week. And you also need a relatively dovish Fed Jerome Powell coming on February 1st. So that is going to wrap up this edition of everything you guys need to know ASAP. If you learned anything, you like my perspective, or you just want to follow this information closer on a daily basis, hit that like button, number 1. Number 2, subscribe to the channel. And number 3, let me know your comments on this. What are your questions? What are your concerns? Let me know that information down below in the comment section. Most importantly, enjoy the rest of your day, and I will see you in the next one.